The Florida housing market in 2025 reflects a clear departure from the extreme volatility that characterized the pandemic-era boom and instead shows evidence of gradual normalization. After several years of rapid price appreciation, accelerated migration, and historically low mortgage rates, the market has entered a phase defined by moderation, longer transaction timelines, and increased sensitivity to affordability. While Florida continues to attract new residents at a national scale, the interaction between rising costs, higher interest rates, and expanding inventory has reshaped buyer and seller behavior across much of the state. Recent statewide pricing data indicates that Florida home values have stabilized rather than continued their previous upward trajectory. According to Redfin, the median home sale price in Florida stood at approximately $405,400 in November 2025, representing a modest year-over-year decline of just under 1%. This movement does not suggest a systemic downturn, but rather a market adjusting after years of unsustainable growth. The relatively small magnitude of the decline highlights that demand remains present, yet increasingly cautious, as buyers weigh financial constraints more carefully than in prior years. At the same time, the pace of transactions has slowed. Median days on market rose to approximately 80 days, a noticeable increase compared with the rapid sales cycles observed between 22 and 22. This change reflects reduced urgency among buyers and a gradual shift toward more balanced negotiation dynamics. Inventory trends further support the conclusion that Florida's housing market is no longer operating under conditions of scarcity. By late 2025, more than 200,000 residential listings were active statewide, offering buyers a broader selection of properties than in previous years. Although new listings declined compared with earlier periods, overall supply remained elevated due to slower absorption. The sale-to-list price ratio of roughly 96% suggests that sellers are increasingly required to adjust pricing expectations, as bidding wars and above-asking price offers have become less common outside of highly localized or luxury-driven markets. This environment places greater emphasis on realistic pricing, property condition, and location as determinants of successful transactions. Migration continues to be a defining factor in Florida's housing demand, even as affordability challenges intensify. The state ranks second nationally in net inbound migration, according to the 22.5 U-Haul Growth Index, underscoring Florida's ongoing appeal to both domestic movers and retirees. Cities such as Ocala, Northport, and Kissimmee emerge as prominent growth destinations, reflecting a shift towards secondary and tertiary markets where relative affordability remains higher than in coastal metropolitan cores. However, while migration supports demand, it no longer translates automatically into rapid price escalation. Many incoming residents face higher borrowing costs and insurance expenses, limiting their purchasing power and reinforcing the market's gradual cooling. Regional disparities within Florida remain significant and continue to shape localized outcomes. In South Florida, particularly in the Miami, Fort Lauderdale, West Palm Beach corridor, international demand and high net worth buyers have sustained activity in the luxury segment. These markets exhibit greater resilience due to cash purchases and global capital flows, which are less sensitive to domestic mortgage rate fluctuations. In contrast, several inland and coastal markets have experienced more pronounced slowdowns. Broward County, for example, recorded notable year-over-year price declines earlier in 25 alongside rising inventory and extended days on market. These conditions highlight the importance of distinguishing between statewide averages and local market realities when assessing Florida's housing trajectory. Affordability pressures represent one of the most consequential forces shaping buyer behavior in the current market. Elevated mortgage rates throughout much of 2025 constrained purchasing power, prompting many prospective buyers to delay decisions or exit transactions altogether. Redfin and other market observers reported elevated rates of pending sale cancellations across major Sunbelt markets, including Florida, reflecting increased buyer caution. Rising homeowners insurance premiums, property taxes, and HOA fees have further compounded affordability challenges, particularly in condominium-heavy regions and coastal zones vulnerable to climate-related risk. These factors collectively contribute to a more selective and measured buyer pool. Seller behavior has also evolved in response to these conditions. The practice of listing properties at aspirational prices and relying on rapid appreciation has become increasingly ineffective. Homes that fail to align with current market realities tend to remain unsold for longer periods, often requiring price reductions to generate renewed interest. As a result, sellers are facing a market environment that demands strategic pricing, proactive maintenance, and a willingness to negotiate. This represents a structural shift away from the seller-dominated dynamics that defined much of the early 2020s. Despite these moderating trends, Florida's housing market cannot be characterized as weak. Underlying demand remains supported by population growth, employment opportunities, and continued interest from both domestic and international buyers. Industry forecasts suggest that easing mortgage rates in 26 could stimulate incremental increases in transaction volume, particularly if borrowing costs decline without triggering renewed speculative behavior. Analysts generally anticipate a period of cautious stabilization rather than sharp appreciation or widespread price correction. This outlook reinforces the view that Florida is transitioning into a more sustainable phase of market activity. Looking ahead, the most likely trajectory for Florida's housing market involves continued regional divergence. Luxury and high-demand urban markets may maintain relative strength, while affordability-constrained areas experience ongoing adjustment. Buyers are expected to retain greater negotiating leverage than in recent years, while sellers will need to remain responsive to evolving demand conditions. For policymakers and market participants alike, the emphasis will increasingly shift toward housing supply, insurance reform, and infrastructure capacity as determinants of long-term stability. In conclusion, the Florida housing market in 2025 reflects a broader recalibration following years of extraordinary growth. Prices have softened modestly, inventory has expanded, and transaction timelines have lengthened, all while migration continues to support baseline demand. These dynamics signal neither a collapse nor a resurgence, but rather a return to fundamentals. As Florida moves into 2026, market outcomes will depend less on speculative momentum and more on affordability, regional economics, and the ability of buyers and sellers to adapt to a more balanced real estate environment.